This is the start of a beautiful friendship. No, not Casablanca, but today's forecast for cloud data dreams. Welcome back to Will of the Market. Grab your hot cocoa. Let's talk about Snowflake, the company humming beneath the surface of AI growth. Snowflake is a cloud-based data platform that runs on AWS, Azure, and Google Cloud. It's where companies stash, analyze, and share data without the hassle, be it data lakes, warehouses, or pipelines. In other words, Snowflake turns data chaos into clarity. Think of Snowflake like the Robin to Batman. Its peers are cloud giants like Databricks, enterprise players like Palantir, and traditional analytics tools. All big names, but Snowflake plays a unique game. Valuation-wise, Snowflake's price-to-sales (P/S) ratio is around 19.3 times, just slightly below the peer average of 20.9 times. So it's not cheap, but competitive. On paper, it's more affordable than some, yet still commands a premium. But margins? Operating margin sits in the red, around -40%, deeper than peers. And in terms of value, it may be overvalued by about 75% in some models. Let's talk results. Snowflake's Q2 fiscal 2026 earnings beat expectations decisively. Revenue came in at $1.14 billion, up 32% year-over-year, topping analyst forecasts of about $1.09 billion. Earnings per share, EPS, hit 35 cents, well above the expected 27 cents, an earnings surprise of nearly 35%. They raised their full-year product revenue forecast to $4.40 billion, up from a previous estimate of $4.33 billion. The reaction? Snowflake's stock jumped 13 to 20% in pre-market and after-hours trading. That's like, I'll have what she's having, but for investors. Behind the scenes, Snowflake isn't just storing data, they're enabling AI. They've launched Cortex, a suite of generative AI services, and Snowpark, a developer-friendly AI/ML toolset designed for performance and security next to your data. Let's break it down with a Power Rangers metaphor. Who's got the Megazord power? Pros: the force is strong. Strong top-line growth, 32% revenue lift. Raised forward guidance to $4.4 billion in product revenue. High momentum via Cortex and Snowpark. Growing high-value customer base, 654 clients with $1 million plus revenue contributions. Cons: even the best fall. Still operating at a loss. Operating margin around -40%. Valuation is rich, 75% over some intrinsic value models. Faces stiff competition from Databricks, Palantir, etc. In short, Snowflake is no longer the underdog. It's a rising star in AI-enabled data infrastructure. They're growing fast, guiding higher, and delivering innovation with clarity. Whether you're a data-driven investor or just love tech drama, keep an eye on Snow. It's cooking up something big. So let that future in, as another famous line might say. Let me know your thoughts. Should Snowflake be in your portfolio? Hit like, drop a comment, and subscribe to Will of the Market for more market insights.